strategy, because this strategy will help you. It help you win. It help you win 80 to 90% of the time. It helps you get into trades at the right time, and it helps you pretty much perfect your craft and pretty much earn money while you're still trying to learn. It's a very consistent strategy, which is why I'm bringing it to you guys. And like I said, this course is just for those people who've been trading, probably trading in their demo, and just are looking for a good, nice, easy to learn, profitable strategy. So that's really the objective here. If you're that student, then this will help you out a lot. This will help you profit a lot of money if you use it correctly, and if you're managing your account properly using your trading plan and your 10% risk management tool. But that's a whole nother course. But as long as you managing your account properly, you will profit a whole lot from this strategy, because it's pretty straightforward, easy to learn, and is very, very accurate. So I'll see you guys there. It's gonna be a quick course, and hopefully it helps you out. It helps you earn a lot of money. So I'll see you guys there. These lines are very, very important. Let me go to negative charts really quickly just to show you. Alright, so let's get out of that. Alright, I'm gonna turn my cloud off. So now look, you go to your daily chart or you go to your 4-hour chart. Now look what price is at. Price is at 1.23. I'm gonna put, let's see, I'm gonna put a line at right here at 120. Right, I'm gonna put a line at 120. This is how you put your zones. Price is right here, so I'm gonna go to the next even number, which is gonna be 120 under it. 120. Don't press OK. Now I have this at 120, and you can just come over here, rectangle, and you can put a rectangle over that, so you can make your little zone. From 120, my next zone is going to be 125. I'm gonna go up every 5, so I can trap price. So look, boom, 125. Get my rectangle. Same thing here. You see, I trap price in between the two zones. As you can see, the price got right here in the zone. It slowed down, came in reverse. Slowed down, came in reverse. Consolidation right here. Because you want to remember, support and resistance are areas, not price. So as you can see right here, boom, how much it respects this line. Respects this line. It came up here, reverse, consolidation. All right, so, and also you want to get your ray. You want to put your ray right down the middle. 120, 125. So this would be 122. Maybe 125. Maybe 125. Alright, so boom. Now this is directly in the middle. This is also one of your zones. I would usually put a box around this one too. And that's basically how you draw your zones. You just wait to see how price reacts toward around your zone. As you see right here, turn the cloud back on, go back down to 1 hour. As you see right here, price came down to the midpoint, the green line. It reversed. And you will wait for price to start crossing your moving averages here. as you can see, it started to trend up. And from this green line to here, that's where you want to be. That's where you would put your take profit at. If you got it right here, you put your take profit at your next zone. But you also want to be mindful of all these rejections here, here. You just want to pay attention to the price and how it's reacting. So as you can see, if you got it right here, you'll wait for it to start crossing, and you would have got it right. Let me show you. You would have got it right. Could have got it right down here. You could have put your stop loss. Well, I would have got it right. I suggest you wait till you get like up here or something. You could have put your stop loss like 50 pips or so, or you could have put it down at this zone right here, this basic retest. But 50 pips is usually cool. You could put your stop loss like right there at 50 pips, and then as price gets above right here, it starts to get above. You could held it. Price pulls back a little bit, but it doesn't go all the way back to your 50 pips, which is why we put stop losses at the last low, which would have been up right here. And then you see it pulls back a little bit, but then it continues on up to your next zone. You could have caught 182 pips. Once it gets to your zone, you let it go. So basically, I mean, I hope that helped you a little bit. You know, just use those zones. It don't matter what chart you on. Just find price, put it in between your two zones at whole numbers. Make sure you go every 5. Put another zone right through the middle of those two zones, and you pay attention to how price responds to those zones. And to get your entries, use the Ichimoku cloud, and you wait for price to start crossing your moving averages on your Ichimoku cloud. Basically, the yellow and the blue line. You wait for price to start crossing that. You would get in, set your stop loss for like 50 pips, and then you ride it on up. I hope that helped you. That's definitely what kind of helped me out, because I used to be, I'm still learning, but I used to be where you at. Like I told you, I blew 20. I blew a lot of money learning too. That's why you just trade in your demo. You go into your demo and you test what I just showed you. You test that out. Once you start to master that and you start growing your demo, then you should be able to grow your regular account. Because a lot of times, what new traders do is you'll see a little bit of red. You'll see red, and then you'll over leverage your account. You'll see red, you'll panic, and you'll get out. But if you would have just set your stop loss and stayed in the trade, it usually goes in your direction. So just find a good entry, set you a 50 pip stop loss, use proper risk management, don't over risk your account, use 0.01 lot size per 100 that's in your account. And that should help you from losing a lot of money and blowing your accounts. Alright, so I'm gonna pretty much kind of show you how I trade and help you out a little bit. Alright, so what I usually do is you want to pick a couple of pairs. Like you see, I got 1, 2, 3, 4 of them over here, and you want to focus on those. When you start out, you want to focus on just a couple, like 3 pairs, so you can learn how they move, and you can just focus on those, and you can watch what they do, so you can catch the moves that they make. So what I do is I come to my chart and I look where price is. And I did a replay on one of my charts back to like March 12th, so you can see like in real time what's happening. So what I usually do is find my price. Price is here at 139.250. So I would draw my support and resistance lines, right? Some people just will like look at the chart, see price reverse here, draw a line here, draw a line here, here, but I don't do that. What I do is, because banks like to trade at even numbers, even and whole numbers, so I draw my support resistance lines at even and whole numbers. So if you can see right here, my line is at 135. And as you can see, if you look back here, you can see price came to that area and started consolidating. Also, right here, it came here and slowed down and came back down and broke back below it. So basically, I find price. I put price in between two support and a resistance line. So I got my first line at 135, and then I will go up 5 to 1.40 and put the next line. As you see, price is now trapped in between those two lines. What I would also do is, after I get these two lines, I would come over here and also suggest you go to tradingview.com, make an account, and analyze your charts on TradingView. I would get a horizontal ray right here, and I would put the horizontal ray right dead center. That would be 137, 500. All right, boom. So, all right. So now I have this line dead center. All right. So, and you once you start playing around with your charts and you start like doing what I did here and putting your resistance line like at these whole numbers and then another line through the middle, you'll kind of look through your charts and see how when price gets near those even and whole numbers and those midpoints, how it starts to respect those areas. So, boom. So down here, you see price broke up above your zone here after being rejected right here and here a couple of times. So the price is right here right now. So and it's near another one of your zones. So what you would do, you would wait until price gets up here and then you'll pay attention to what it does. So you want to scale down to, once you draw your lines, you should just scale down to an hour chart. All right, so let's see. So price is here, right? You see price came up and then it came back down and retested your midpoint right here. That's why I have the midpoint, because price usually respects that area. And then after it retested this area, you could get in for a buy. If price was up in here, you could have got in to the buy. And you could have tried to sell that, not sell, but buy that back up to your next zone, which is the next very line that's up here at 140. All right, so I would have got in for the buy right there. After it retested and came up, I would have got in for the buy. And then I would try to buy it up to my next zone, which is 140. All right, boom. As you can see, all right, you can see if you would have got in right here where it retested at, price would have came up, it would have pulled back against you about 40, 45, 46 pips, but you want to have your stop loss in for, basically you want to have your stop loss at the last low. So I'm going to have my stop loss right here at this last low. So like if I get in the trade right here, bouncing off this line and going up, I would put my stop loss here at the last low. And as you can see, price went up, came down, went up, boom, and smacked my line, which is where I would have had my take profit at. And once price gets to your zone, you want to take your profit, then you want to wait to see what it does. I use an Ichimoku cloud. I use the Ichimoku cloud, which is right here. If you go to your indicators on whatever you use, if you just go to your indicators, you can type in Ichimoku cloud, it'll pop up. You can put it in, and then on my settings, I just have the lag span turned off. So, all right. So once price gets up here towards my zone, I'm gonna just pay attention to what it does, and also you can scale down to once price gets to your zone and you watching what it does, you can scale down to a 15. Once you're ready to enter, you can scale down to a 15-minute chart, so you can see it a little bit better and get a better entry. But what I like to do is I'll wait right here. I see it rejecting my zone, right? I wouldn't get in right here because this candle could pull back up. I will wait for this candle to close, right? I will wait for it to close, and then you also wait for price to start to cross your moving average here, the yellow line. I have the yellow line and the blue line. You wait for price to cross the yellow line, and then if you want to be less risky, you wait for it to cross the yellow line and the blue line, and then you get in for a sell it down, and then once price is under the cloud, and you should have like a red cloud following it, that would give you more confirmation that this is a sell you can hold on to. So let's press play and see what happens. All right, stop right here. All right, as you can see, like I said, you wait for these bearish candles to close. You could get in up here, but I suggest you wait until it starts to cross both your lines, right? Once it crosses both of your lines, once it starts to cross both of your lines, you get in for the sell. You get in for the sell. You could roll this all the way down and to 118 pips. And you see, you have the green line right here. The green line is right here. That's your midpoint. When price gets near your midpoint, expect it to slow down or reverse. Expect it to slow down, pull back, and then come down, or you just expect it to completely reverse. So once price would have got to your level right here, the midpoint, you take your profit. You take your profit and you wait for another entry. So as you can see, it reversed right here. Again, so now it's going back up. So if you wanted to get in on this, you could wait until price crosses. You could get in right here where it crosses the yellow line, or like I said, for extra confirmation, you wait till it crosses the blue line also. Then you get in. And you could have got in right here. Put your stop loss down here about 50 pips, 40, 50 pips, whatever is comfortable for you. It depends on your lot size. But you could have got in right here where it closed above your moving averages, the yellow and blue line, and then you could have rolled it all the way up. Then once it gets back to your zone, you get out of the trade. It would have caught you a nice 145 pips, right? And then you let it go and you wait for another. You wait for a re-entry. So as you see, price. You can see right here, price rejected the zone. And if you go back further, even further on your higher time frame, you probably see price rejecting this zone a couple more times in the past. So right here, you see it's rejecting. It's consolidating right now. Consolidating is when price is just moving side to side. That's when it's not trending up or down. So you wait for it to completely start rejecting the zone. As you can see, it starts to break below. And then, like I said, it starts to cross your line here. You could get in for a sell here, right? But that would be a little risky because you're still pretty close. Because that line is pretty close to your zone right here. So I would suggest you wait. I would suggest you wait here since it's so close to your zone. Let's see what price does. So this is why I suggest you wait, because you see how close this line is to your zone. You don't want to get in right there. You want to wait for extra confirmation. You would have wanted to wait till this price broke down below the blue line also, if you wanted to get in for the sell. But when price is on your zone here, you leave it alone. Don't get in. But you could have got in here, as you see price go below here. Then you see price breaks out of your zone right here with this big candle. With this big candle, that shows a lot of momentum. Price breaks above your yellow line here, right? And then also, if you want to use a MACD, you can just go to indicators, type in MACD, and you'll get this here. As you see, you also got your green line above your red line, also indicating it's going up. So if you could get in right here, or if you want to be less risky, you wait for this candle to close, and then you get in on the next candle, and then you ride it on up. Then once you see the green line again, that's your midpoint. That's your midpoint we talked about that you want to have in between your gray lines. You would let price go. You would take profit right there. But also remember, price doesn't always have to get all the way up to your line. It could have got right here, up here. That's why I would usually have a box like this around the green line. So like when price gets in that box or anywhere near, I'm taking my profit. And as you can see, it came here, it reversed a little bit. Now it retested this line, came back down, and now it looks like it's going back up to retest this line. So what I would wait for right here, is I wait for this to either come back up, break above. There we go. I wait for it to come back up, break above my line, come back down and retest, and then I buy it up. Or I would be waiting for it to come back up, retest this line, then break down for the sell. But you want to wait. You always want to wait for price to cross your moving averages before you get in, so you can have extra confirmation. Now let's see what it does. All right, boom. Perfect example. You can see price was rejected here, rejected here. Price was rejected here, couldn't quite get down. But like I said, you don't want to get in here, like it's risky to get in for a sell here as you see across this line. One, because it's just getting in on the cross of the yellow line is a little risky. You want to wait till it cross both of them to be extra sure. But remember, if this line is close to your zone here, the green line, you don't want to get it. You want to wait to see how it reacts. You want to wait for it completely breaks away from that zone. So as you see, price came down a little bit, came back up, retested the zone, broke through it. Broke through the zone. And then if you scale down to your 15-minute chart, you'll probably see it break through and then retest and then go up. But you see it broke through, and this is completely above blue and yellow moving averages. So you will wait. Actually, this candle right here, you will wait till it breaks above. This candle closes, you'll get in right here on this candle. And then you'll ride that up to your next zone. Boom, you caught 252 pips. Get out of the trade. Get out of the trade, and you wait for a re-entry. And it's that basically it's the same thing over and over and over. That's why I say pick a pair, pick 1, 2, or 3, and you just go back and you can use this Ichimoku cloud along with putting these zones in, and you just watch how price reacts towards those zones. You either buy to your zone, like right here, it's in your zone, it breaks above, closes above the 2 lines, you buy. Right here. You see price broke above blue, yellow, breaks out of your zone, wait for it to close, boom, you get in right here. You get in for the buy to your next zone, your midpoint, let it go. Price pulls back down, pulls back over both of your lines here, pulls above your green line, you get in for the buy, you ride it on up. And you keep doing that over and over and over again until you master it. Until you master it. That'll help you. Having these zones and this Ichimoku cloud for confirmation will help you get into make good entries into trades. It'll keep you from making bad entries, which will ultimately cause you to lose money. So you basically just waiting for price to get to your zones, and you basically responding based on how it reacts to your zone. Like I said, when price is at your zone right here, you wait for it to break out of your zone. You check to see if it's above your two green, your blue and yellow line. And yours might be not yellow or blue. I just have my colors change to that right here. So you wait, it breaks above that line, you get in for the buy, and you ride it on up. Ride it on up. Ride it to your next zone. Take profit right here. Wait for another entry. Break back above. First of all, you wait till it break above your zone. Wait till the candle close. You get in. Once it gets to your next zone, you get out. Just master that. That makes it a lot more simpler for you if you pay attention. These lines are very, very important. Let me go to negative charts really quickly. Hey guys, so that'll do it for the video. I hope that was helpful for you guys, and hopefully you could understand where I was getting at with this strategy. Like I said, it's a very profitable strategy. So as long as you use it correctly, I guarantee you, you're going to earn money. You're going to earn a lot of money, and